Take a moment, look at the disclaimer. This content is for educational, information, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we look at the markets, how BTA analyzes the markets. This is Rod from BTA, and we are known as the middle traders, the premier analysts. What we want to talk about right now is Google. You know I've been doing, this is part 4 of the FAANGMT. Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla. This is part 5, Google. I've said time and time again, I don't see how the market is going to rally if the FAANGMT stocks, doesn't rally also. Maybe not all of them. One or two of them can have their individual problems. News can come out, things can happen. They can have their individual problems. But for the most part, these stocks make up over almost close to 50% of the NASDAQ 100. Almost 50% of the NASDAQ 100. And they make up close to 30% of the Standard & Poor's 500. So I don't see how holding such a big part, a big position of these indexes. I don't see how. I just don't see how the market could go up if these stocks don't go up too. They make up a huge portion of these indexes. 50 and almost 30%. Well, this is part 5. This is Google. And now we got to say something about Google first and foremost. Look, y'all, Google right now is going to probably trade up for the next couple of days. And there's a reason behind that, because Google, let's see what the FAANGMT, this is live now, y'all. Y'all looking at the live platform right now. Okay, you see these prices changing, and they changing rapidly because the Fed is going to make a decision on interest rates today, right? So that can be big. They may shock the market. Who knows what these guys are going to do, right? They may raise interest rates by a full 1%. The market may get shocked in the beginning, may trade down, but I'm telling you, that might be a positive catalyst for stocks because they start saying, hey, look, the Fed is serious about crushing interest rates. You would think that will push the market to, straight through the ground, but it might actually sell off and then rally because they might say, hey, the Fed is serious about interest rates. They're going to stomp out interest rates. And that could be positive for the market. We have to see. But we don't worry about all that because the charts, we are technical analysts. We analyze the technical chart structure and let the charts be our guide. But you see these prices moving right now. Okay? Here's Google right here. Here's Google right here. Alphabet. It's up $51 right now. 2.43%. Okay? Amazon up. All of the FAANGMT stocks are up. This is our sentiment page. This is how we get a gauge of what the sentiment is. What's the pulse of the market right now? And as you can see, Google is trading up, but it probably will trade up. It's been trading up for yesterday and today. I found it very interesting that yesterday was a down day. Okay, but Google, traded up very nicely. Well, I knew Google was going to probably trade up. Netflix traded up yesterday. Okay, Facebook was up yesterday. Amazon was down yesterday rather. Amazon was down. Facebook was down. Microsoft was up yesterday. If you look over here on this side, you might not be able to see it that well, but I should have pointed that out. You can see the little green bars here. Hard to see, but they're right there, okay? Showing that this is a daily chart. Every time I push one of these buttons, my daily chart over here changes, okay? So Tesla, I believe, was up yesterday also. Let's look at Tesla. Here's Tesla. Today is up. You see everything is up today. Well, yesterday Tesla was down. Okay, so a couple of FAANGMTs were up yesterday on a hard down day. All right. But right now, Google is trading up $52, right? But it's a reason for that also, because Google is about to do a stock split. All right. Look, Google is about to do a stock split. You can see right here, Alphabet has announced a 20-for-1 stock split, which takes effect after the close of business on July the 15th. Okay, July the 15th, next month, it's gonna take effect. Today is June the 15th. It's gonna pave the way for the stock to enter the Dow Jones. Google stock could also be more attractive to retail investors. They're trying to get people to put money in this thing. But what did O'Neill say about excessive stock splits? He told you. The master, the oracle, William O'Neill, our teacher, he told you that excessive stock splits is a sign of trouble. When you start seeing all these companies making excessive stock splits, it's a sign of trouble. They trying to get positioned to try to get money into the company. They see the trouble ahead. Well, Amazon just did a 20-for-1 stock split that took effect on June the 6th. Remember, Amazon was trading up around $2,400 a share? Well, Amazon right now is $106. Okay, they did a 20-for-1 stock split. Tesla did a 5-for-1 stock split last year. Now they're about to do another 3-to-1 stock split this year, in the next month or so. Google is doing a 20-for-1. I just showed you that. So Google shares are going to come down to somewhere around $109, $110 a share on July the 15th when they split. Well, depending on how high it goes now. But if at the end of the day, whatever price is at, it's going to do a 20-for-1 stock split. Okay? So I would not be surprised to see Google trading up. But that's not what this is all about. What we're saying right now is that we don't see how the market can rally if the FAANGMT stocks don't. So now let's look at Amazon. I'm sorry, we got to go to Google. All right, we let's go back and get Google. Okay, we this is part 5. All right, and we want to look at Google. Okay, here we are. We're back at Google now. Let's pull up the daily chart now of Google. As you can see, let's analyze the daily chart. We're not going to make this long, okay? You see, it's below the white line, right? The white line is our five-day moving average. The green line is our 9, and the yellow is our 21. And we got a downward trend in 50-day moving average. So it's in a clear downtrend, okay? The last 2 days it's trying to go up, but on lower volume. On the push down, we had higher volume. On the push up, the volume is drying up. On the push down, higher volume. What's that telling you? Large institutional investors were selling the thing off. Okay? Large institutional investors are selling the thing off. All right? So it's in a downtrend. We know. We already spoke about this. Ain't no way. No how. No way we're going to buy a stock that's below a downtrending 5-day moving average. That's our short-term momentum moving average. Short-term momentum moving average. Ain't no way we're going to do that. Okay? We just not. All right? We're not going to get crushed like that. Look, at the end of the day, it's not time yet. But when it does break, I don't see how. I don't see how the market is going to rally if these stocks don't take off. Look at me drawing some structure, some trend lines, and horizontal support levels on the chart for you. Okay? You see that? So right now we below overhead resistance right here. I just put that line for you. We found a little support at this resistance level here at 2143. All right, we got that was prior resistance, and now it might act as support. But we got the overhead resistance at 21.94 right here. We're testing it today. That's today's price action right here. This chart is live. Okay, this is a live chart right now. The market is open. All right, so you may see this change a little bit. All right, but at the end of the day, we got to get above this overhead resistance area here in this downward trending trend line across these highs. All right, so we need to see that happen in order for us to start even thinking about Google, right? But it's below a downward trending 5-day moving average. It's nothing to talk about. All right, let's look at the momentum here. All right, up top you got the price bars up here. This is the price bars up here. We already talked about it's in a downtrend. Well, the MACD, which is right here, we got a bearish crossover right here. The yellow line crossed below the blue. That's a bearish crossover, right? Let me make sure y'all can see this. I'm expanding, just zooming on the most recent price action. Okay, as you can see, we got a bearish crossover right here. The yellow line crossed below the blue. That's a bearish crossover. The histogram is in the red. The stochastic already gave us a bearish crossover right here. Okay, even though prices are moving sideways, the stochastic gave us a bearish crossover here, and it's pushing down almost to the oversold level. It's almost down to 20. That's telling you that even though prices are moving sideways or down, well, it's also prices are closing lower and lower within its range. Lower and lower within its range. Momentum is coming out. Okay, let's look at the RSI. All right, well, we can put our 50 level right here. Let's just put a little line across 50 real quick so we can get a gauge on what side of the 50-yard line is Google on. It's on the wrong side of the 50-yard line. Okay, up top you got the price bars. That's price up top. Up here we already talked about that, but here's the 50-yard line. This horizontal yellow line is at the 50 level. This is the RSI. Well, it's below 50. It hasn't been able to get above 50 for quite some time, since way back in April. Okay, it's on the wrong side of the 50-yard line. It's telling us that the sellers are in control of the momentum. Okay, it's more momentum. The sellers are in control of the momentum. The histogram on the Chaikin money flow down here, it is positive, but barely, and it's turning down a little bit. When this is negative, okay, saying that money is coming out. All right, so the Chaikin money flow is green right now, but it's trending down. It's getting smaller. All right, as prices are moving sideways, it's getting smaller, saying that money may be still coming out of Google. All right, but they're going to be, I would not be surprised, like I said before, that Google don't trade up because of the stock split. For some reason, people think they're getting something when the stock splits 20-1. They're not. It's like having a dollar bill, and I say, yo, let's split the dollar bill up into coins. I give you 4 quarters for your dollar. Do you have anything more? No. That's the same thing as the stock split. All they're doing is taking the 1 share for $2,000 and dividing it by 20 and giving you the other share, giving you 20 shares that's worth $100 a piece. It's like me giving you 4 quarters to equal $1. You're not getting anything, but for some reason, people think they're getting something for nothing, and they go out and they start buying the stock before the split. It doesn't make any sense. But that a lot of things that happen in the market doesn't make sense. It ain't gonna make no sense if they hike interest rates to shock the market today with an interest rate hike of 1 or 2%, 1%. Well, they ain't gonna go 2%. That'd be crazy. But 1%, okay, a full 1%, you would think that would shock the market, cause a complete collapse. Well, it may trade down for a little while. The next you know, it bottoms out and start rallying. And you say, well, this don't make no sense. Well, the market does a lot of things that don't make sense to the masses. All right. That's why we got to analyze our charts. But let's go back to Google. All right. So you see here that Google right now, all right, is in a clear downtrend. Now here's the guppy. All right. Here's our guppy. All right. The magenta line of closing prices, you see, is still below, trying to get inside the green faster moving averages. But the green faster moving averages has flipped here and expanded to the downside. The magenta line of closing prices tried to get inside the red longer term downward trending red moving averages, but it found some turbulence there, some resistance, and it fell off. Now it's below all of them, or below the longer term red moving averages and the shorter term green moving averages, and it's trying to get back above it. Well, the guppy is telling you the trend is clearly down. There's no ifs, ands, and buts about that. So Google trend is down, all right? No ifs, ands, and buts about it at all. Let's look at the Ichimoku cloud and we call it a day for that. And then we look at the weekly charts and it's all over. It's not going to be long, all right? Well, as you can see, the Ichimoku cloud, Google is well below the longer term and the short term faster moving average. The faster moving average is the yellow. The longer term is the magenta, okay? But look at the cloud. The cloud is negative, okay? It's down. The cloud is down, all right? It's turned negative. That's telling you that the momentum and everything is still down. It's below, price is below the shorter term and longer term moving average, and the cloud is down, all right? The only thing is that we did get a TK crossover here where the yellow faster moving average crossed above the magenta moving average. That's a positive sign, okay? So a TK crossover is positive, all right? That's bullish, all right? But we got a flat magenta line here. A flat Kijun-sen, which is the magenta line, and when prices are below it, that can act as some key overhead resistance. So we have to see. But we already know Google is not ready for us to buy it right now. We're just analyzing the chart, okay? We're just analyzing the chart. So look, be careful, all right? Be careful. That's all. Now, let's look at the weekly chart real quick. Okay, let's go to the weekly chart. All right, and we can see it's not ready for us to make any kind of purchase right now. We know that, but we got to watch it, because if it bottoms and then rallies up, then market probably gonna go. If these FAANGMT stocks can move, well, look, here's the downward trending white weekly moving average, which is our 4-week moving average. The green moving average is our 8-week, and the yellow here is our 13-week, which represents 1 quarter. Look up top here, we got a royal blue, which is 30-week. It's all pointing down. It's all pointing down. Here is our 100-week moving average right here, right overhead. 100-week moving average right here. That's a lot of overhead resistance right there. Okay, that can pause. That can pause the upward momentum for Google. All right, so we have to be careful. We can't trade against that. We won't trade against that. Not here at BTA. We're not going to trade against that. But we're just telling you that if the FAANGMTs can't go and rally, I don't see how the market is. Now, look, it's not too often. It's not too often you break below. It's not too often you break below, okay, these long-term moving averages. Look how many times. I know it might be difficult to see, but look, the 100-week moving average is right here. Well, if we go back, let's go back and see if we can get it a little tighter here. Look how many times we broke below the 100-week moving average, okay? This is going back to 2014. We did it right here. We got below the 100-week over here, okay? We didn't break it again into over here, going into 2019, late 2018. We broke it again here in 2019. And then we broke it over here in 2020 with the corona collapse. And now. So it's not too often we get below this 100-week moving average. Well, we're there now. Okay, the 150-week moving average, which is this here, this line right here, the 150-week moving average, right? This purplish looking line right here, moving average line. Well, we ain't hit the 150-week moving average, but right here and right here in 2020 with the corona collapse. And we talking about going back right now to all the way over here is 2014. So you see what I'm saying? Are you digging what I'm saying to you? You following me? I'm trying to tell you something. We are selling off to near extremes. If we come down and touch that 150-week moving average, that's something. But look, we ain't hit the 200-week moving average except for back in 2020. That's this brown line right here. So we're at extremes on Google, but it's not ready yet. We're touching levels that is at extremes, okay? Levels that it don't hit too often. We're there. So if we start rallying up and getting above these levels, you understand why it's possible for it to happen, because we at levels that it hasn't hit too often, Okay, so you see where Google is at right now. Okay, you see what's going on here. If I pick this horizontal support level right across here, okay, and pick this horizontal support level right across here, you see where prices are stopping at. These are long-term weekly support levels, okay? These are long-term weekly support levels. You see it. You see where prices are pausing at right now, okay? You see that, all right? So are we going to find some support, get back above that 100-week, find some support here, get back above that downward trend of 4-week, 8-week, 13-week, get above the 5-day moving average on the daily chart? Okay, you see what we're talking about, all right? So we can't see how. We can't see how the market is going to go on any real strong rally if these FAANGMT stocks cannot. Now we're going to finish up with our SW chart, okay? And I tell you, this is a very powerful chart. This is a very powerful chart, okay? I showed this to you before. This is a very powerful chart. Now look, up top here, we got a 21-week moving average in yellow. We got a 30-week exponential moving average in royal blue and a 30-week simple moving average in the magenta. When we need prices to get above these moving averages, and you're doing something. When prices are trending below these longer-term key moving averages, the downtrend is definitely in a downtrend. But down here is a very powerful indicator. That's the relative strength line. Relative strength line. You want to see this line above this green zero line. When it's above this green zero line, that's telling you that Google is outperforming the Standard & Poor's 500. We need outperformers. We want stocks that's doing better than the overall market. Well, we need to see Google get above all them long short-term moving averages on the daily chart, get above those 4-week and 8-week and 13-week moving averages on the weekly chart, get above this 21 and 30-week moving averages on this SW chart, see some volume coming in, and we want to see this line here on this relative strength line turn from red to get above the zero line and start turning blue. And volume coming in on the weekly chart, volume coming in on the on-balance volume chart, telling us that large institutional investors are buying into this thing, and we are outperforming the Standard & Poor's. So that's our take on Google. Okay, Google has to change around. Google has to start moving. You see the levels that we're looking at. You see what's going on here. We're going to be monitoring this stuff every single week. Every single day I'm looking at it. Every single week. When it improves, I will be letting y'all know. I know this is not financial advice, and y'all know it's not financial advice. But wouldn't it be wonderful if it was? But it's not. But we got our eye on everything moving. See you in the next video.